Hi there, welcome to Kneppy Invest and welcome to December 16, 2024. About 43 minutes left of training today. And as expected, another red day on the ASX. This run of red days has to come to an end. Now, it might come to an end tomorrow, might come to an end on Wednesday, might come to an end next week, or maybe next month. But eventually it's going to come to an end. So you always have to look at the positives moving forward. And a pretty actually negative day for the market today. And I'm just looking at small caps down 1.2%, tech down 0.74%, and resources down almost 2%, which is understandable because gold dipped a fair bit on Friday's session. Okay, so the agenda for today's video will go through the best and worst performing sectors, indices, and also companies. Then we'll have a look at the top 5 stocks of the day. I've already recorded the stock of the day, which is Southern Cross Electrical Engineering. I've also recorded a small cap of the day, which is a company called Ice Tana. Ice Tana is not in the top 5 stocks of the day. It possibly belonged there because it is by far the best performing company of the day by a percentage change. And then I'll have a look at some charts and maybe touch upon one of your comments, or maybe 2 of your comments. I might also, I'll touch upon also a tweet from the Kobayashi letter that I do find intriguing. So let's start off with this particular tweet from the Kobayashi letter. So this is interesting. And I'm not going to make any comments about whether this is a sign we're going to see a drop in the market, because I don't know if there's any research being done on this. And it relates back to insiders selling and how many insiders are selling when it comes to American companies. So the Kobayashi letter starts, what is happening here? As stocks hit all-time highs, corporate executives are cashing out of their stocks at record levels. In fact, there are now only 6 times more insider sellers than buyers. Why are insiders cashing out of the strongest market in history? And there's quite a few replies to themselves in this. And this is actually what I wanted to see. Insiders chart, sellers versus buyers, or ratio of sellers to buyers since about 2004. And it is at record highs according to this. We also saw some pretty big peaks back in 2021. And I'd say that was near highs as well. Back in 2014, I don't think there was near highs then. And 2004. I wish this went back to like 1995 so we could see the dot-com bubble. And you notice the ratio of sellers to buyers in 2009 was at its record low. That was the best time in history, maybe not history, but that was one of the best times to be buying companies. And I still remember when I was telling people, I think I might enter the stock market, everyone was going, don't do that, it's terrible in the market right now. It was one of the best times of buying companies in history, and insiders knew that. That's why the ratio of sellers to buyer at that point in time was so low, because it was an absolutely brilliant time to be buying. Anyway, does this mean anything? Maybe not. Who knows? Who knows? Maybe not. I'd like to see some research. They didn't provide any research. Kobe's letter just went through who's selling, like Jeff Bezos, Mark Zuckerberg, also, where was it? In Nvidia, some of the insiders there are selling as well. Talking about this comes at a time when the S&P 500 is now on track for its second straight annual gain of 24% or more. The last time this happened was in 1998, before the dot-com bubble popped in 2000. Now, that means there was a whole year there, 1999, when the markets kept on going up. So who knows? The bubble could, or maybe not the bubble. I don't think we're in the bubble right now. The stock market could keep on going up for the next 12 months or even 24 months. We just don't know at this point in time. So just because insiders are selling doesn't mean we're going to see a drop in the market. But I'd love to see a bit more research done on this. Trending in Australia, aliens. I wonder if it has to do with all those drones in New Jersey, which, me liking every tweet about drone sightings and alien invasions. I did see or hear an explanation about possible reasons why there are a lot of drones now in New Jersey, because they're searching for something bad, like radiation. So this is just one theory, that they're searching for radiation because there's been a threat in terms of a nuclear bomb. Anyway, let's move on to the ASX Today. So yeah, pretty negative day, which I expected. Maybe not this negative when it comes to small caps, tech, and resources. All odds down 0.49%, and the ASX 200 or XJR only down 0.38%. Maybe in the last 30 minutes of trading or 40 minutes of trading, we'll see a bounce. Just don't know. Maybe we will. Sometimes it happens. Most of the time it doesn't. Let's have a look at sectors, and you'll notice, I just noticed here, tech has been going down all through the day, which possibly is a sign that maybe NASDAQ futures are down. I don't know. But a little bit of negative sentiment in tech today. So let's have a look at the sectors. A few sectors are up, staples, financials. So one of the reasons why we're not down as much as we could have been, and this does make sense because XGO is not down all that much compared to small caps, resources, and what was the other one, tech, is because banks. Maybe banks have saved us today. Maybe, which is unusual. The most if I had to say which sector is in a bubble right now, I'd say financials. The banks, CBA is in a bubble right now, and they've saved us. Anyway, I wouldn't say saved us, but they've helped us out today. Utilities, industrials, discretionary, all up. Materials down. Real estate down 1%. IT down 0.86%. One of the reasons why real estate might be down is because there was that digital infrastructure, DGT, spun out from, maybe not spun out, but HCM Capital sort of spun it out. And two big down days in a row for digital infrastructure REIT. So newly listed REIT down a fair bit on the Friday session, down another 5.5%. And they've seen, is it HMC? It's HMC Capital has seen their share price tank down 12% today after falling 7.2% on Friday. So a little bit of oomph has come out of HMC Capital. Anyway, so maybe that's one of the reasons why we're seeing a bad day in real estate. IT down as well, energy and telecommunications down big as well. Okay, so let's have a look at the ASX 20. So I fully expect, only down 0.26%, I fully expect banks have done pretty good today. So let's confirm that. So I'm assuming 8 companies up, 12 down. Oh, 10. Don't see that too often. And the best performing companies, Transurban, Woolworths. There's Westpac, Brambles, Wesfarmers, QB, Telstra, NAB, CBA, and ANZ. So all the banks are up. ANZ, which is, to be honest with you, the best valued bank, yet it's the worst performing company. Every single time when I look at the 4 big banks, ANZ tends to be the worst performing. So obviously less positive sentiment within ANZ. And maybe all the fund managers are just putting their money into the other 3 banks. Don't know. Anyway, and the worst performing company in the ASX 20 is Fortescue, then BHP, and Rio Tinto. I was thinking gold is one of the reasons why materials is down today, but obviously it's iron ore. Iron ore has had a really bad day. So those 3 companies, 3 of the biggest companies in the ASX, are down big. And then after those 3 companies, we have WiseTech, Goodman Group, and REA Group. So 2 tech companies and also a real estate. Okay, let's move on to top gainers and top losers today. Have a look at the top gainers. And at the top, the best performing company today is a company called Istana. And I have done a standalone video on this. First time I've ever had a look at this company. It's an AI company to do with safety and security. Share price up 75%. So look out for that video, which I will release on the morning of the 17th of December. Other companies doing well today, fairly small companies. Before Pace had another really good day. That chart, not the sort of company I would like. This chart is spectacular. Before Pay, a beautiful looking chart. Even the volume, we're starting to see a little bit of an increase in volume, a bit of a spike in volume on the second, but it's a beautiful looking chart. Nothing negative to say about this particular chart. Maybe I could say something negative about the company and their business model, but nothing negative about this chart. And I wonder if the reason why the share price is on a massive tear is because as we have increasing pressures on the way we live, more people are going to use this company's services. I want my money before I get my pay. I'm pretty sure that's what their business model is. Anyway, so let's move on. If it works, good for them. But I just don't want it to work. Anything else here? We have Freelancer. Not going to have a look at that company. A company called Lynch Group, which is all about flowers, up 12.4%, fairly low turnover. Syntara, This is another really good looking chart. Now, I did not know until, was it yesterday, that this used to be called Pharmaxis, which I do know about. So that makes sense. This company, I had a look at many years ago. And when I say many years ago, probably, 2016, 17. And hasn't really been doing anything, but definitely there's been a shift in sentiment and the trend in the share price in the past 5 or 6 months. There's been a definite shift. Have a look at this chart, and you can just see how, if you just look at the lows and the highs going lower, and then all of a sudden, you can just see, if you put a line right there, sort of right there, that is an indication that there is a shift in sentiment and a trend in the share price. So around about June into July, definite shift in trend at that point in time. I don't know why. Don't follow this company all that closely. In fact, I'm lying right there. I don't follow this company at all. Even when they were called Pharmaxis, I had a look at the company way back, maybe 10 years ago, but I haven't had a look at them since. But maybe things are moving in the right direction for this company. And maybe I should take a closer look at Syntara. Anyway, what else do we have here? Nothing much. Now let's have a look at the top gainers by market cap. Contact Energy, now fairly low turnover, so we can move on. Austel, now some of these movements are fairly low, only 4.6%. BrainChip did release an announcement today. They had a pretty good day last week. In fact, what I'm going to do, I'll just have a quick look at that announcement. BrainChip, not the sort of announcement that would get me overly excited, but if this company releases more and more of these announcements, that would be only a good thing. So front grade, Gacia licenses, BrainChip's Akita IP. I prefer really good financial news from the company. I prefer to see receipts starting to grow, revenue growing, that their products are becoming more beloved among end users. That would be a really good sign for me. At this point in time, I'm not there just yet with BrainChip, and the valuation of the company is still quite rich, or maybe even too rich for me. So maybe the only thing I'll do with BrainChip is trade it at this point in time, and let's see if this is worthy of a trade right now. And I'd say no, not yet. I think the bottom has been reached, but I'm not there just yet with BrainChip in a shorter term. Anything else here? Oh, DGL. What I'll do is, after I've gone through the top 5 stocks today, I'll have a chart section, and I'll have a look at DGL because maybe that chart is starting to look really good. So DGL, won't have a look at Money Me. BetMakers, another good day for that company as well. And yeah, that's it. Now let's turn our attention to the top losers. Okay, and coming in at number 1 by percentage change is a company called Investigator Resources. And I do have this in my top 5 stocks, so we can move on. Pretty big turnover, share price down 39.47%. Become fairly obvious why that company is down by that amount, just by looking at the commentary. All you have to do is look at some words, and you'll know it's pretty negative. What else? Visionary Technologies, they're delisting, share price down again. Nothing much here, to be honest with you. All these companies are fairly small. The biggest company in this particular list is Minboss Resources at $63.85 million. No, Rimfire Pacific Mining at $80 million. So that's, So no big companies have seen significant drops. And I think that's a sign of the times we're in now. Management of companies are maybe starting to go away for the Christmas period, going to Europe, or maybe going to Bahamas, who knows where they go this time of year, going skiing in the Alps. So we're going to see less and less interesting announcements being released, but we will still see some released. Now let's have a look at top losers by market cap. So HMC Capital, I've already talked about that, down big, a little bit of negative sentiment when it comes to the REIT they spun out. Venture, up and down like a yo-yo. So up big on Friday after being down big on Thursday. So this is just a bit of volatility. Boss Energy down. This could be interesting. Boss Energy. Now, I'm going to leave Boss Energy to the chart section. So remind me about that. Boss Energy. And in fact, Appen down. Should I look at Appen? Black Cat Syndicate. Visan, Twitomics. Some interesting companies here, by the way. Oh, and maybe Uranium had a bad day because Peninsula's down as well. Anyway, and Lotus Resources, that's also a uranium company. So maybe some negativeness in uranium. And Silex Systems, that's not a uranium mining company, but they have technology when it comes to uranium extraction or something, down 8.9%. So I would expect uranium prices to be down big. Maybe not big, but definitely down. Okay, so maybe Appen. I'll put Appen on the list as well of charts I might want to just have a little squeak at. Okay, now let's have a look at the top 5 stocks of the day. And we'll start off with energy company called Meridian. This is New Zealand based. Share price up 3.82%. It's actually a nice little rally. Meridian interim results announcement date. Meridian Energy monthly operating report for November 2024. I'll be honest with you, I have never had a look at this company before. I knew of this company. I knew they're New Zealand based. I think most of their energy production is in New Zealand, if not all of it. And I thought, because it's fairly slow, not much happening, not much news flow, I'll have a look at this company. Why not? Just have a look at this monthly operating report. And I found it interesting because they talk about snow storage. They talk about snow storage and water storage, which I found really interesting. So snow storage in Meridian's Waitaki catchment was 91% of average in early December. So I'm assuming they want that snow to melt, and that snow then becomes water, and then it's a sort of like a, what do you call it? The water thingies that power stuff. Yeah, anyway, so you can see sometimes I have no idea what to say. What's the snowy, the water turbine, whatever it's called. Anyway, so that's what I'm assuming they mean by snow storage. They have it in the mountains, they wait for it to melt, and as it goes down the mountain, that can be used to create electricity. That's what I'm assuming. National electricity demand in November was 2.2% lower than the same month last year. So people in New Zealand are using less energy, maybe because of cost of living pressures. Don't know. The other thing I liked about this one was they talked about the climate in New Zealand, and it's completely different than the climate in Brisbane at this point in time. Brisbane is just wet. It's just wet, wet, wet. Significant amount of rainfall November into December. I actually had a look at the rainfall we've seen over the last 2 months. It's been significantly above average. Significantly above average, yet this is not El Nino. I think there's something else going on here, and I think it's sea surface temperatures. Sea surface temperatures over the last few years have been way higher than normal, and that will drive more rainfall. Anyway, so November 2024 was dry and warm for most of the country. Again, completely opposite to what we're seeing in Brisbane. That can make sense. Sometimes if it's really nice in New Zealand, it's not that nice in the east coast of Australia. And when it's nice in the east coast of Australia, it's not so nice in New Zealand. You do see that sort of relationship. Anyway, so temperatures above average for both islands. Rainfall was below normal for much of the country, apart from the South Island's west coast, which had above normal rainfall. They also talk about aluminium smelter. Anyway, so I have no idea. And when I read this, I had no idea what I'm supposed to be looking at. What's good, what's bad. I thought there might have been some bad things here, some good things here. The other thing is another company called Contact Energy. We saw the share price up for this company. They released another New Zealand-based company, share price up 7.55%. They also released an operating report. Okay, so let's look at the chart. And this is where it comes a little bit intriguing, actually. Not the daily chart, the weekly chart. This company has the hallmarks of a high-quality company just by looking at the chart. So this company listed on the ASX, I'm assuming it's listed on the New Zealand Stock Exchange, back in 2015, and this is an uptrend from the bottom left to top right. Now, there was a massive peak in the share price back in 2020, not sure what, maybe overexcitement, but this is an uptrend. It's a nicely ordered chart. Now, market cap of this company is 13.5 billion, so it's a fairly big company. Dividend yield 3.7%. Probably wouldn't look at the price to earnings ratio, but it's actually a nice looking longer term chart. So this could be a company you just hold for the long term and just get their dividend. And I would assume that dividends increase over time slowly, but I would assume it does that. Let's have a look at the dividend history via ComSec. Yeah, it slowly goes up, very slowly. So this goes back to 2015, yeah. In fact, I'd say, if anything, it's flat. I'm going to say it's flat. So I would assume now, because it wasn't as growing as much as I thought it would have been. That the dividend yield has been dropping for this company, so maybe not the best indication there. The other one was Contact Energy. This was another interesting chart as well, almost identical than Meridian. Beautiful uptrend. Very low liquidity back in 2016. So these two companies listed almost the same time. Very low liquidity for this company, and that liquidity has improved a little bit. And again, just going up slowly. Dividend yield 4.11%, price earnings ratio 28, and market cap is 6.5. So this company is a little bit smaller. Okay, so two for the price of one. Meridian and also Contact coming in at number 5. Now on to Investigator Resources. Share price down 42.11%. We have 14 minutes left before the closing auction. Share price could fall even more than this. It is at the low of the day, which is bad. A bad sign. Just saying bad then just tickled my throat. So Investigator Resources, I'll be honest with you, I've never heard of this company before, but I did have I did notice an announcement from this company, which was Paris DFS update. I was like, what does that mean? Well, I don't know. I do know DFS, but Paris, surely they don't have mined in Paris or anything like that. So I thought, okay, I'll open up this, and straight away I went, oh, this is negative. Almost straight away. Follow extensive, definitive feasibility study. That's right. Anyway, so I'm not sure. So definitive feasibility study, I've always thought that has something to do with mines. And then I saw Paris DFS. I went, is the mine called, or the project called Paris, or do they have a mining project in Paris? No idea. Anyway, this was really negative, and you could see it's really negative for almost straight away. The second sentence, talking about the DFS being delayed. So it's anticipated this year, and this year doesn't have much time. I would assume shareholders were getting a bit nervous because they anticipated it in 2024, and we're coming to the end of 2024. So they probably had to make this announcement. So this particular DFS was anticipated this year, and it will be delayed to enable further optimization work to be undertaken on key aspects of the project development plan. The board acknowledges the significance of the decision and shares the frustration of shareholders at the delay. However, development of the DFS has required inputs from numerous sources and multiple iterations of mining and processing scenarios, some of which has changed since the 2021 pre-feasibility study analysis. The board recognizes the delivering of a successful silver mining operation at Paris. So again, there must be the mining project name, Paris. So it's not in the city, I'm assuming. Is crucially dependent on presenting the most accurate and up-to-date DFS. My suggestion to any management teams would always be conservative with this sort of thing. Think of the worst-case scenario and have that as your goal. So obviously they did not think of any worst-case scenarios. They just went, 2024, I think we can do that. And now we have seen the share price drop because of this disappointing announcement. Anyway, so interesting, they're talking about silver prices here. So the following additional aspects of the project will be further studied. Silver price, open pit optimization, owner-operator mining. Seems like they have a lot to do here. Anyway, let's have a look at the chart for IVR, Investigator Resources, and obviously it's not looking good. Share price down 40%. And I'll be honest with you, share price has been a downtrend for a while, since 2021. Now, this is the weekly chart. So a bit of excitement in this company back in late 2020, although you probably could say that about any company on the ASX. There was a lot of excitement in all companies at that point in time. In fact, you could say there was a bubble. I'm going to say it right now. There was a bubble that started in middle or just after COVID-19, and you saw a lot of company share price just rally on nothing. Rally on nothing. Maybe that's what happened with Investigator Resources. If you look at the daily chart, nothing to be excited about this daily chart. And if anything, today is really negative. So last time share price was this low, could be, no. Last time share price was this low was back in July 2020, before that run up in the share price. So unfortunately, not good news for Investigator Resources. Maybe ultimately this will be the best thing for the company, and maybe now is time to buy this company's shares. But I have no idea about this company at all. Where is Paris project? That sort of thing. No idea. you could have a look at some of their presentations. Or they have a fluorite project, do they? Anyway, let's move on to, by the way, the market keeps on dropping. You'll notice XJO is now down 0.57%. So I mentioned maybe we might see a rally in the last 30 minutes of trading. Well, we've seen the opposite. We've seen the market drop. In fact, yeah, it's down. Yeah, everything's dropping. So something's massively. Look at that. It's just both. They're all plummeting. I would say maybe that could be without without knowing anything about economic news flow today. It wouldn't be much. China. I don't think I have to refresh this. Yeah, because I just opened it up. Duh. Bitcoin hits new record high. That has nothing to do with. Oil edges lower. China industrial output growth slightly above forecast. That seems positive. I would say maybe South Korean shares gain after presidential impeachment. That's actually positive. I would say maybe it's just American futures are maybe a little bit down. That's all I can think of right now. There could be some other explanations that I'm not aware of. Anyway, so that's interesting what's happening in the market right now as I speak. It's dropping. Okay, let's move on to Cobram Estate Olives. Oh, share price. I thought the share price might be up a little bit more than that. Share price at $2. One of the reasons I've included this company is just because of the chart. This is an olive producer. I always think of agricultural companies as fairly similar to mining companies, a little bit different, but fairly similar, just a touch subtly different. Anyway, so this company will be ultimately, their financial performance will be ultimately be determined by olive demand and olive supply. And they have very little control over both of those. Anyway, completion of US, well, they sort of have a, no, they don't. Ultimately, they can increase their own supply of olives onto the market. They have control over that, but overall, they have no control because maybe they have a few competitors and they have really big harvests, and that would negatively affect Cobram Estate. We see this with Select Harvest, with their almond. That can be significantly affected by the almond crops in California. If they have a really bad year, that positively affects Select Harvest. If they have a really good year, it negatively affects Select Harvest. Anyway, completion of USA harvest, and there's this update. It's the business update that got me. I just wanted to see how they're going, business-wise. USA harvest. Okay, so I did draw a few positives from this. So the 2024 Californian harvest, so I'm talking about almonds, California, olives, California. California is really important, not only in America, but also the world. They grow a lot of stuff. I don't know what it is. The climate doesn't seem that great. Maybe that's just because I'm ignorant when it comes to farming. Anyway, 2024 California harvest led to the production of 3 million litres of olive oil. This volume is 6.4% lower than 2023. So I thought, that's pretty negative. But then they referred that as an on year. So I don't know anything about on years and off years for olive oil or olives or olive oil. But obviously they have on years and off years. But it was 77% higher than 2022, the previous off year. So if you compare previous corresponding period, what we call that? Previous like period, really good year for Cobram olives, up 77.1% from 2022. This growth in production comparing to the last off year is driven by the larger area under supply contract from third-party olive growers and the maturing profile of our groves in California. So again, I don't know anything about olives, how long they have to mature, that sort of thing. And they actually do mention in the next paragraph, it is important to highlight that currently only 11% of Cobram's USA groves are mature. So obviously, I'm just assuming you can only get olives from mature groves. 30% are immature and 59% are yet to come into production. So I'm not sure the difference between immature and yet to come to production. Is it 3 stages? Immature, yet to come to production, but sort of in between immature and mature? Don't know. Milling extraction efficiencies and extra virgin olive oil quality were excellent, delivering above average results on both parameters. And then they go on about growth development, land acquisition and funding, that sort of thing. They're purchasing 1,534 acres or hectares of land within close proximity of their existing Californian groves. Anyway, and they've also mentioned an existing facility or increased their existing facility with CBA. Let's have a look at the chart for Cobram. I think it's Cobram. It's not COB, that's cobalt blue, it's CBO, which is interesting because Cobram, COB, so a lot of times I will put COB, which is cobalt blue. There's a few companies like that. Anyway, so this is the weekly chart. This company listed back in 2021, share price downtrend, and then it broke out back in November of last year. And I was trading this for a period of time because of that breakout. Yeah, I was trading this for a period of time, but broke out beautifully in December last year. Beautiful breakout. The uptrends looked like it was coming to an end, but it's moved back into an uptrend. And the share price did break out about 3 or 4 weeks ago, above $1.97, and been going sideways since then. So, in fact, this chart looks pretty good. I like this chart for Cobram Estate Olives. And I probably would have liked a better move today. Share price get to an all-time high, but is that an all-time high? Oh, not quite. Oh, it's getting very close to all-time highs. Getting very close to where the share price was when it listed. Anyway, so nice looking chart for Cobram Estate, maybe more of a slow burner uptrend for this particular company. Okay, let's move on to company coming in, number 2. We have Inghams Group, chickens. Who likes chickens? Everyone likes chickens. Share price only up 0.95%. The main reason I've included this company in the top 5 is because they have a new CEO. And I really like how they've done this. This is the way to move from one CEO to the next. So CEO, Managing Director, Retirement and Employment, mid-2025. So obviously, the old CEO, the previous CEO, or the current CEO who is retiring, mentioned to the board, I think I'm retiring. I think I'm going to retire, but let's find someone first to take my position before we announce it to the market. So the company announced that the current CEO and Managing Director, Andrew Reeves, would retire from the role in mid-2025. So that's, 6 months from now, possibly. So a long transition period from the current CEO to the new CEO. And then they went through a comprehensive global search that included internal candidates and actually did end up hiring or endorsing, the board endorsed the current CEO of its New Zealand business, Edward Alexander, as his replacement. I just like the way they went through this. And you have to respect, like the CEO who says to the board, I'm thinking of retiring and we need succession plans. We need to, go through this process of finding a replacement before we announce to the market that I'm retiring, because that can cause perceived high risk in the company and the share price might suffer because of that. And they went through this process and they're hiring internally, it looks like. So Edward Alexander, the new CEO of Inghams from mid-2025. So let's have a little chart for Inghams. I don't think this has been popping up on my radar for a while, so I'm assuming the share price or the chart looks pretty negative. Yep, still looking negative, a big down day. In fact, we've seen a few big down days for this company since the start of 2024. In fact, January, share price of Inghams was $4.50. Now it's $3.19. So a couple of bad announcements from the company has seen share price drop. And no interest in this company just based off the chart. I would just trade this. I would not own this for the long term. That's just me. If you find there's some high quality aspects to Inghams, go ahead. Own it for the long term. And the market, I thought that was 0.84%. No, it's only 0.64%. And coming in number 1, we have Southern Cross Electrical and Engineering. I have done a standalone video on this. Share price up a little bit on another project award announcement. So 2 in the last 5 calendar days. And even though these are 2 positive announcements, we have seen a bit of pressure on the share price, which just underlines how important the chart is. So I'll have a quick look at the chart right now for Southern Cross. Share price was in an uptrend. Share price sort of rolling over, moving into a downtrend. And even though the company is releasing positive announcements, we are seeing selling pressure. The reason we're seeing selling pressure is because all those shareholders who bought at high prices consider this company a dog stock. They just have to get out, even though the company is releasing positive announcements and they're putting pressure on the share price. So the last two announcements, we're seeing some buying coming in, and that buying has dried up fairly quickly, and the share price has dropped on both of those days. Okay, so that's Southern Cross Electrical and Engineering, the stock of the day. Now we'll have a look at a few charts. DGL. I'm getting excited about DGL. So this is potentially looking really good. Now, I thought the same thing back in January, potentially looking pretty good, and then they released really negative results in February. But this is definitely looking better for DGL. I'm starting to like this chart. I did buy on the dip back in February, and I still own their shares. So I bought at 60 cents. Yep, 60 cents. So that trade's in profit now. Go trade, go trade. I do like this chart. I'm liking this more and more. If they release something positive, I think the share price will go off. Yeah, this is what I'm looking for. This is the sort of chart I'm looking for. Share price sort of was in a downtrend and it's showing signs of turning around. And if the company releases something positive, oh yeah, could go ballistic. Could go ballistic, but they have to do that first. Boss Energy, share price down big today. I have a feeling, oh no, not quite. I was going to say, I have a feeling the share price might be at a new long-term low, but oh, it's so close. Share price was at these levels back in September. So I thought maybe the share price would have been below that low. So that low on that day was 238, and the share price today went down as 239. So maybe it's a double bottom. Maybe double bottom for Boss Energy. Maybe the share price will bounce off here. It could. This could be a low risk trade, by the way. You could buy in, say, 240. So let's have a look where the share price is right now because it's 20-minute delayed. 240. You could buy some shares at 240. And if it breaks down below that previous bottom, that previous low, that would be just get out for a small loss. Maybe there's going to be a bounce. Yeah, anyway. And the other one was Appendix. This has been all over the place. Yeah, that's right. It was up really big on Friday, up 11.3% on Friday, then down 12.1%. I don't like this. Just too much volatility in this company's share price. And I think day traders are still loving Appen right now. Yeah, they're probably trading this on and off. Yeah, buying and selling, buying and selling. Anyway, so that's the three charts I wanted to show you. And I think that's it. A few other companies were very close to getting in the top 5, include... Oh, only one other company. That's right, because I did Istana as my small cap of the day. The only other company that was close to getting in the top 5 is Highcom, up 6.5%. New $4.8 million ballistic product order received. They also had sort of a trading update in this, which they didn't really mention in the title. In fact, they just mentioned here. In addition, Highcom now expects revenue to end first half at the upper end of guidance previously advised of between 23 and 25 million. So in a way, it's not a true upgrade, but the very fact there looks like they're going to end up at the upper end of guidance is actually a good thing. By the way, the chart for Highcom, no. I think it's definitely going sideways. It's consolidating. It's been consolidating since February, so almost a year. And maybe the wait isn't that long. And we did see a bit of selling today as well. Share price got as high as 19 cents, 16.5 cents, which is understandable. We've seen that before a few times in the past few months where the share price rallies and then on the day the share price pulls back because share price rallied a fair bit back in August, and there would be a fair few shareholders who bought back in August who have to get out now. They can't stand it. Share price is lower than when they bought. They have to get out. Okay, and we'll have a look at one comment or two comments. Okay, we'll have a look at Thorley Photography and Stu Ursi. This is very intriguing. Actually, no, this could be a standalone comment. Yeah, I reckon this is a standalone. I might do a standalone on this. Talking about how people in is a yeah, we'll do this as a standalone. I might do this tomorrow. So let's do Stu Percy. What are your thoughts? I have sold my top 200 Oz ETF the banks make up a large percentage and are overvalued. When they are sold off, if that ever happens with ETF, will drop by a large amount. I have put the money into individual stocks and would buy the ETF again if that happens. Okay, what are my thoughts on ETFs? I'm not a fan personally of ETFs, and the main reason is, for instance, if you buy the top 200, like the XJO ETF, you're buying companies I would never buy. So you're holding companies I would never buy. I know you have no idea which companies are going to go on a run, but I prefer to own high quality companies for the long term. And if you do that, you're going to beat the market anyway. You're going to significantly beat the market over the long term. So what you do when you buy an ETF is you're buying low quality companies. So you're suppressing your potential returns. That's the way I look at it. So I prefer, and I understand why some people buy ETFs because they don't want to put the time and effort into finding those high quality companies. And I don't think to me, it's not that hard to find high quality companies. I think it's quite simple if you learn to do that sort of thing. But I understand why people buy ETFs. I just don't buy ETFs. I have held ETFs in the past, and I usually sell them fairly quickly because I find there's just companies in the ETFs I just don't like. And I think, why would I own any of these companies at all? And that is definitely true for the top 200 Oz ETF. You'll be owning a high percentage of that ETF will be in the banks. And I would not own the banks right now. I would not even own, I might own BHP for the long term if I get the right price. I would not own, so the same is true for Woolworths. I'd buy BHP and Woolworths only if I get a good price. And I don't think those companies are good buys right now with a margin of safety. That's what I'm talking about, margin of safety. I'd buy CSL, a few other companies in ASX 20 I do own, and I just want to filter companies I don't like out. That's why I tend and want to be an individual company picker. Anyway, and I just don't know, when we do see a sell-off, we could see the financials, the banks sell off and the rest of the market be fine, or maybe it's going to be a general sell-off and everything just falls, including the banks. Anyway, so if we do see the banks sell off, yeah, these sort of ETFs will drop. The XJ will drop because the four big banks are the four biggest 6 companies in Australia. Is that right? Yeah, 4. Yeah, of the 6 biggest companies in Australia, 4 of those are the big banks. So there is an over, what's the opposite of diversification? There is an over concentration in Australia when it comes to at the top of the market. We're overly concentrated in banks and financials, and even you could say banks and mining. And I would always argue banks and miners are not high quality companies. Okay, so I answer thoroughly photography's question in a standalone video tomorrow. Sensei says, for mentioning rigged, thumbs down for mentioning rigged fixed pro spot. Silly. I'm going to give that thumbs down, Sensei. Rigged fixed pro sports. That's silly. Just James Dean, might be time for Santos. Capital expenditure program finishing. CEO flagged bigger dividend payouts. So I would always, and Rick Thelian says, cocoa has been going up for some time and spelling cocoa wrong. Oh, that's okay. We all have our problems spelling. Cocoa, well, depends what you define as some time. I didn't have a look at cocoa chart for about a month. And in that month, yeah, the cocoa went ballistic in that 1 month. I didn't have a look at it. Yeah, it started to move up in the middle of November. So I didn't have a look at this chart for 1 month. So is 1 month sometime? If you mean going all the way back to like 2023, yeah, it's been going up for a long time. And then it hit a peak back in April and then wasn't really doing anything before this latest run. Yeah, anyway, so sorry, Just James Dean. I went straight to Rick Thelian. Anyway, let's have a look at Santos. CapEx program finished. I don't know anything about the company itself when it comes to capital expenditure or the CEO flagging bigger dividend payouts. That's irrelevant to me because, again, Santos is a low-quality company. It's a mining company or energy company, oil, whatever. Oil's not doing that crash hot, to be honest. And I would assume Santos, which has been trading in a range, and I have a feeling it's near the bottom. It's broken below the bottom of the range. Well, that's interesting in itself. Let's have a look at the weekly chart, by the way. Now, I will say, I'll be honest with you, I have traded Santos in the past. In fact, This is one of the first trades I ever made. Yes, Santos is one of the first trades I ever made. And this was back, this would have been, I think, couldn't have been then. I forget exactly when it was. All I remember was the share price was really low. Could have been before that. I don't think it was. I remember the share price falling a lot before I bought. And then the company released something positive, and I went, oh, they've released something positive. And then the share price went on a really nice run. It must have been in 2017. It must have been sometime here. I forget exactly when. The share price was really low, maybe August 2017. Anyway, so I did trade this for a while. And so I bought about 350. I can't remember when I sold. It was a short-term trade. Anyway, and the main reason I would say this is not a high-quality company, it's a mining company. And just look at the chart. Why would you own this for the long term? Share price right now is the same it was back in 2004, 20 years ago. Anyway, and they have no control over the price they sell their product. The other thing now is the share price of this company was trading in a range between, say, $6 or $6.60 and $8.10, and it's fallen below that. Now, if you think oil is getting to probably as low as it might get, this could be a good buy. This could be sort of a false break of the bottom of the trading range, and this share price might rally. I actually could see that happening. So if you actually do think that, this could be a good trade right now. But I just don't like what I'm seeing on the chart right now. So I thought maybe there would be a bounce of 660, but 645. The chart does look negative right now. So maybe there is some value of these prices. Maybe it's up to you. But for me right now, it's more of a trade than a long-term hold. And the chart is not that enticing at this point in time. It might become enticing over the next few weeks, but at this point in time, not that enticing. Okay, that's all I have for this particular video. ASX Daily Rundown. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.